This is your LMAX Exchange technical update for Tuesday, November 22nd, 2016. Euro dollar. So the euro is seeing a bit of a correction in recent trade, although the market remains pressure to the downside, and any rallies at this point should be very well capped ahead of the 109 area in favor of that next downside extension to retest the critical 2015 multi-year base at 104.63. Sterling dollar. So cable is confined to a consolidation off the recent 31-year low down around 120, and at this point the pressure remains on the downside while the market holds below that previous base that was in place around 128. Really, a break back above 128 would be required to take the pressure off the downside, and anything in between is still classified as bearish, with the market holding below 128. Dollar yen. So dollar yen has seen a surge in recent trade, with the market now trading up towards next key resistance at 111.45. There is risk, however, once this level is tested, that the market looks to see some form of a correction after daily studies have rallied into significantly overbought territory. At this point, a break back below the recent support that was seen around 109.80 would be required to officially take the immediate pressure off the top side. Euro Swiss. So Euro Swiss is bouncing in recent trade, but overall the pressure here remains on the downside, and it looks like the market's going to want to go down to retest the 2016 base at 106.24. Any rallies from here should be very well capped ahead of 108. Aussie dollar. So Aussie is seeing a bit of a recovery, but overall here the pressure remains on the downside since the market broke below critical support at 74.21. This paves the way over the coming days back towards a retest of next key support at 71.45. Look for any rallies from here to be very well capped ahead of 76. Dollar CAD. So dollar CAD is seeing a bit of a correction with the market pulling back in recent trade, but overall any setbacks here should be very well supported, with the broader structure highly constructive and ideally supported into the 130 to 132 area ahead of the next major upside extension beyond the 136 area and towards 140 further up. Kiwi dollar. So although we've seen Kiwi bounce significantly out from recent lows, at this point the latest breakdown below 70 is a bearish development and should pave the way for a test of next key support at 69.52, below which will expose a more meaningful drop into the 65 area. Look for any rallies from here to be very well capped ahead of 73. SPX 500. So the S&P 500 has rallied back towards the recent record high from August. At this point the market is looking like it could still be putting in a major top, although if we establish above that previous record high and above 2200, it could open the door for fresh record highs and a fresh upside extension. But inability to establish above 2200 will suggest that the market could be putting in a top and accelerate declines. A break back below 2100, however, would be required to put the pressure back on the downside. Gold. So gold has seen a nice little bounce, with the market being very well supported into some key support at 1200. At this point, the market remains constructive despite the latest pullbacks that we've seen over the past several weeks. While the market holds above 1200, really only a close below 1200 would give reason for pause and put the pressure back on the downside. Until then, there's risk for a bounce and a retest eventually back towards the 2016 peak at 1375.